Nvidia's price target hiked to $190 from $165 over at Bank of America. You can see the stock is up about 2.5%.
Nvidia just skyrocketed this year. But what if I told you it's still just the beginning? AI investments are exploding, and Nvidia's cash flow is projected to hit $200 billion in just 2 years. Plus, their CEO just made a $713 million move that's got everyone talking. Stay tuned. This news could change everything for Nvidia stock investors. Nvidia's 2024 stock performance has been nothing short of impressive. Throughout this year, Nvidia's stock has doubled in value, catching the attention of both new and seasoned investors. While many stocks have struggled to keep up with the volatility in the broader market, Nvidia has stood out, proving to be one of the hottest opportunities around. Earlier in the month, Nvidia's stock hit a peak of around $130. However, it recently saw a minor dip of about 4%. This dip wasn't due to anything directly related to Nvidia, but more a result of overall market trends and concerns about potential US government restrictions on exporting AI chips. While it may seem like a concern, that drop created what some investors might consider a buying opportunity, especially given Nvidia's long-term trajectory. Now, let's talk about what analysts are saying, and there's no shortage of excitement around Nvidia. Analysts across the board have expressed confidence.
Are telling you maybe 170, 175. Of course, we don't cover the stock, but that's the technical, objective-based price move.
And one of the most notable voices is Bank of America. They recently increased their price target for Nvidia from $165 to a bold $190. That's a massive jump, implying significant upside from current levels. This kind of optimism isn't just based on speculation, it's rooted in Nvidia's strong position within the booming AI industry. Nvidia is being called a generational opportunity, and for good reason. The company is at the forefront of a technological shift that's driving demand for its products, especially AI accelerators. These accelerators are vital for running the complex AI models used by some of the world's biggest companies. As the demand for AI technology continues to grow, so does Nvidia's total addressable market, which analysts estimate could be worth over $400 billion, as this opens up massive potential for growth. What makes this all the more promising is the rapid evolution of AI models. Training these models requires exponentially more computing power, and Nvidia's GPUs are in high demand to keep up with the pace. This isn't a short-term trend. AI is expected to continue growing and evolving, and Nvidia's leading role in this space positions the company for long-term success. This has created a wave of optimism among analysts who see Nvidia not just as a short-term play, but as a key player in shaping the future of AI technology. While the recent market dip may have caused some concern for those watching the day-to-day fluctuations, the broader picture shows a company with immense growth potential. With its stock performance in 2024, analyst backing, and leadership in the AI space, Nvidia is positioned to continue dominating the tech world and delivering strong returns for investors looking at the long game. Now that we've looked at Nvidia's performance, let's see how AI is fueling its rapid growth and market leadership. Nvidia has become a central player in the AI revolution, and its dominance in the field is driving massive growth. At the heart of Nvidia's success is its GPUs, graphics processing units. These chips have become the backbone of AI infrastructure. While traditional CPUs have powered data centers for years, they simply can't match the performance of Nvidia's GPUs when it comes to AI. The reason? GPUs are built to handle the large, complex computations that AI models require, making them perfect for training and running advanced machine learning algorithms. Nvidia's technology is transforming the way companies like Microsoft, Amazon, and Meta build their data centers. These companies are spending tens of billions of dollars to upgrade their infrastructure, and Nvidia's GPUs are playing a huge role in that shift. Data centers have traditionally been built around CPUs, which were great for general computing tasks. But as AI becomes more advanced, it requires far more computational power.
We're at the beginning of a new industrial revolution. This industry is going to be producing intelligence.
Nvidia's GPUs provide that, allowing these tech giants to create AI-optimized data centers that can handle everything from training massive AI models to running recommendation algorithms like the ones used by YouTube to suggest videos you might like. One of the most exciting things happening right now is the massive growth in AI spending. According to a report from Bain's annual technology conference, companies are expecting expected to continue pouring money into AI infrastructure for years to come. The report projects that spending on technology infrastructure is set to reach unprecedented levels, and Nvidia is perfectly positioned to benefit from this trend. In fact, Nvidia's GPUs are in such high demand because they help companies not only build better data centers, but also save money in the long run. Here's why that matters. Most data centers today are based on CPUs. However, running AI workloads on CPUs is expensive and inefficient. Nvidia's GPUs allow companies to switch to a GPU-based system, which significantly reduces the total cost of ownership. This is a game changer for companies that are constantly running AI applications. By investing in Nvidia's GPUs, these companies can lower their costs over time while increasing their AI capabilities. This shift from CPU to GPU-based data centers is a massive opportunity for Nvidia, especially since there's already around $1 trillion worth of data center infrastructure globally that's in the process of being upgraded. This switch is expected to continue for several years as companies overhaul their existing infrastructure, with AI becoming an essential part of everything from social media algorithms to large-scale data analysis. Companies have little choice but to make these investments, and Nvidia is right at the center of it all. It's not just tech giants that are investing in AI infrastructure. Governments around the world are also getting in on the action. In 2024, Nvidia is projected to earn $1 billion in revenue from government investments in AI. This is a significant jump, considering that number was essentially zero just a year ago. Governments are recognizing that AI capabilities are now a strategic necessity, both for national security and for staying competitive in the global tech race. This is especially important for countries that want to develop their own AI infrastructure instead of relying on foreign technologies. AI is becoming a critical part of military and government operations, from data analysis to defense systems. As more governments start pouring money into AI, Nvidia is expected to be a top provider of the technology they need to build their own AI capabilities. The AI boom is only in its early stages, and Nvidia is already seeing the benefits, with companies and governments alike investing heavily in AI infrastructure. The future looks bright for Nvidia and its investors. The company's dominance in the AI space is clear, and the industry's growth means that Nvidia's GPUs will continue to be in high demand for years to come. The ongoing shift from CPU-based to GPU-based data centers and the projected increase in AI spending, both in the private and public sectors, will keep Nvidia at the forefront of this technological transformation. Next, we'll explore Nvidia's exciting innovations and what's coming next in their tech pipeline. Nvidia's future is packed with cutting-edge innovations, and at the forefront of that is its upcoming technology pipeline.
This is Hopper. Hopper changed the world. This is Blackwell.
One of the most exciting developments is the Blackwell chip, Nvidia's next generation AI processor. The Blackwell chip is set to push the boundaries of what AI can achieve by delivering even more computational power. Following closely behind Blackwell is the Rubin architecture, another breakthrough Nvidia is preparing for the future. Each year, Nvidia rolls out new tech, staying ahead of its competitors by consistently upgrading its hardware to meet the increasing demands of AI. Releasing new technology every year is a key part of Nvidia's strategy. This approach not only keeps Nvidia at the top of the AI industry, but also fuels the company's continuous growth. For companies in tech, staying relevant and ahead of the curve is crucial, and Nvidia excels at this. These annual releases ensure that Nvidia remains the go-to for companies needing the best AI solutions, keeping it deeply embedded in the AI space for the long haul. By consistently improving its tech, Nvidia can charge higher prices for new product while still lowering costs for clients in the long term due to the efficiency gains that its chips provide. This leads us to innovation-driven growth. One of the reasons Nvidia is so successful is that its advancements in technology drive the demand for its products. The Blackwell chip, for example, offers performance improvements that will help companies run even more complex AI models at a lower cost. While upgrading to these new systems requires significant investment upfront, companies save money over time because Nvidia's technology uses less energy and processes data more efficiently. This This is a big deal for businesses that rely heavily on data centers, as it lowers operational costs in the long run, making the investment in Nvidia's tech well worth it.
This is what hundreds of millions of gamers in the world plays on. It's a GeForce.
The cost-saving benefits of Nvidia's innovations are particularly appealing to companies that manage massive data centers, such as Microsoft, Amazon, and Meta. These tech giants are constantly looking for ways to improve the efficiency of their AI models, which are used in everything from recommendation systems to large-scale data analysis. Nvidia's ability to provide technology that boosts AI performance while cutting costs makes it an easy choice for these companies. That's why they are spending billions to upgrade their data centers with Nvidia's latest product. One of the reasons Nvidia remains so dominant in the AI space is its ability to form strong strategic partnerships. Microsoft, for example, has been working closely with Nvidia to build AI-optimized data centers. By leveraging Nvidia's GPUs, Microsoft can enhance its cloud computing services and AI-driven applications. This partnership helps Microsoft stay ahead in its market while giving Nvidia a steady stream of revenue from its cutting-edge products. Nvidia's relationship with Accenture is another example of how strategic partnerships are fueling its growth. Accenture, a leader in consulting and professional services, helps businesses implement AI solutions across various industries. By collaborating with Nvidia, Accenture can offer its clients the best AI hardware on the market, which means more companies turn to Nvidia for their AI needs. These partnerships have a massive impact on Nvidia's growth and its ability to stay competitive in an industry that's advancing at a rapid pace. It's important to note that Nvidia's partnerships go beyond just providing hardware. They involve deep collaboration on AI solutions that drive business innovation. Companies like Microsoft and Accenture are able to use Nvidia's expertise in AI to create tailored solutions for their clients. This creates a cycle where businesses relying on AI become more dependent on Nvidia's products, further cementing its place as a leader in the industry. The demand for AI continues to grow, and Nvidia's innovations are perfectly aligned to meet that demand. By introducing new technologies like the Blackwell chip and the Rubin architecture, Nvidia is ensuring that it can handle the increasing complexity of AI models. And by partnering with major tech companies, Nvidia is guaranteeing that its products will be widely adopted across industries. In the AI space, staying ahead of the curve is key, and Nvidia's commitment to annual releases and innovation keeps it at the cutting edge. As businesses continue to invest in AI and look for ways to improve their data centers, Nvidia's products will only become more essential. Its strategic partnerships further ensure that Nvidia will remain a dominant force in AI for years to come, making it an exciting player in the future of technology. With innovation in mind, let's take a look at Nvidia's CEO and how his recent decisions impact the company's future. There's been a lot of buzz around Nvidia's CEO, Jensen Huang.
Yeah, Carl, Jensen Huang's comments lifting Nvidia's market cap by over $200 billion yesterday,
selling shares of the company, and it's understandable why this gets people's attention. In recent months, Huang sold around $713 million worth of Nvidia stock. For many investors, insider sales can raise eyebrows, as they might wonder if the CEO knows something about the company's future that they don't. But in Huang's case, this situation is different, and here's why. Huang's sales are part of a planned strategy to reduce his personal holdings in Nvidia over time. This kind of planned sale isn't unusual for executives with large stakes in a company. After all, Huang has a significant portion of his wealth tied up in Nvidia stock, and it makes sense for him to diversify his investments. Having such a high percentage of one's wealth in a single company can be risky, no matter how well that company is doing. So while insider selling often sparks concern, it's important to look at the context. Huang isn't walking away from Nvidia. In fact, even after these sales, he still owns billions of dollars worth of stock. His long-term financial interests remain deeply connected to Nvidia's success. For investors, this can be reassuring because it shows that Huang is still betting on Nvidia's growth. What's also worth noting is that by selling some shares and diversifying his wealth, Huang may actually be in a better position to make more strategic decisions for Nvidia. When all of your personal wealth is tied to one company, it's easy easy to be overly cautious or hesitant to take risks that might be necessary for the company's future. By selling a portion of his shares, Huang can focus on leading Nvidia without being as personally affected by short-term stock price movements. So, rather than seeing these sales as a red flag, they could actually be a sign that Huang is making smart financial moves, both for himself and for the company. He's reducing risk but still holding a massive stake in Nvidia, which shows that he believes in its long-term potential. After breaking down CEO activity, we'll now analyze Nvidia's stock performance. Let's break down what's been happening with Nvidia's stock in simple terms so you can understand why people are excited about its future. Stock movements, what you need to know. Nvidia's stock has been on quite a ride this year, with its value doubling and then taking a small step back. Right now, the stock price is hovering between $125 and $130, which is seen as a good range for stability. This simply means there are plenty of people buying Nvidia shares in this price zone, helping to keep the price from dropping further. If it stays in this range, it could be a solid foundation for the stock to rise again soon. If Nvidia's stock price can break through the $140 mark, we could see it begin another upward climb. The next challenge would be around $150, which was where the stock peaked before the broader market pulled back. These two price points, support around $125 to $130 and resistance around $140 to $150, are key levels to watch for Nvidia's short-term performance. As for momentum, indicators like the Relative Strength Index, RSI, which measures if a stock is overbought or oversold, are in neutral territory. This means Nvidia's stock isn't being overpurchased or underpurchased right now, giving it room to grow either way. If it moves too far in one direction, it may signal that a correction could come, but for now, things look stable. Another important factor is the stock's moving averages, which help us understand longer-term trends. Nvidia's stock is currently sitting above its 50-day and 200-day moving averages, which is a positive sign. These moving averages suggest that Nvidia's overall trend is still upward, meaning there's confidence in its future growth. Nvidia isn't just about flashy stock moves. Its business fundamentals are incredibly strong, making it a very attractive company to invest in.
The way we compute is fundamentally different. We created a processor for the generative AI era. And one of the most important parts of it is content token generation.
Over the past year, the company's revenue jumped from $25 billion to a staggering $96 billion, a huge leap for any company. This growth is largely driven by Nvidia's leadership in AI technology, which is becoming more essential across industries. What's interesting is that Nvidia's success isn't just limited to big tech companies like Microsoft or Amazon. Smaller firms and startups are also turning to Nvidia's AI solutions to remain competitive. As AI becomes more integrated into everyday business operations, demand for Nvidia's products continues to rise, making its market opportunities vast and diverse. One of Nvidia's key strengths is its ability to generate free cash flow, basically the extra money it has after covering all expenses. Analysts predict that Nvidia could generate over $200 billion in free cash flow in the next couple of years. This puts it in the same league as tech giants like Apple. This financial muscle gives Nvidia the flexibility to keep innovating, expand partnerships, and reward shareholders through dividends or share buybacks. Nvidia's next earnings report is one of the most anticipated in the tech world, and here's why. In its last report, Nvidia posted a 206% year-over-year revenue growth, reaching $18.1 billion. Much of this came from its booming AI business, particularly data centers, where revenue surged by 279%. For the upcoming report, analysts are expecting strong numbers again, but the big question is whether Nvidia can sustain this kind of explosive growth. Some concerns have been raised about competition from companies like AMD and Intel, but so far, Nvidia has stayed ahead by constantly improving its technology. Investors will also be paying close attention to Nvidia's guidance, which is the company's forecast for future performance. If Nvidia's leadership predicts continued growth in AI spending and stronger partnerships, the stock could have more room to climb. One last thing to watch is Nvidia's profit margins, which have been strong due to high demand for its products and the premium prices it can charge. However, if there are signs that margins are shrinking because of rising costs or competition, that could raise some concerns. Still, given Nvidia's strong position in the market and its ability to innovate, the long-term outlook looks bright. Now that we've seen Nvidia's stock from all angles, let's explore the wealth-building opportunities available for investors. When it comes to investing in Nvidia, options trading can be a great way to generate passive income while managing risk. One of the key reasons options work so well with Nvidia is the stock's high implied volatility. What that means for you is that the premiums for selling options are higher, leading to greater income potential. Essentially, when a stock has high volatility like Nvidia, option sellers get paid more because the risk of big price swings is higher. That opens up several strategies, each designed to either generate income or acquire shares at a discount. For those looking to generate passive income, selling options can be one of the most effective methods. You don't even need to own Nvidia shares to get started with some of these strategies. Selling puts, for example, is a popular method among Nvidia investors. When you sell a put option, you're agreeing to buy Nvidia stock at a specific price, the strike price, if it drops to or below that level by the expiration date. In exchange for that obligation, you get paid a premium upfront, which you get to keep regardless of what happens. If Nvidia's stock stays above the strike price, the put option expires worthless and you keep the premium. If the stock drops below the strike price, you'll be assigned the shares, meaning you'll have to buy Nvidia stock, but you'll get it at a lower price. So either way, you get paid. This can be an effective way to generate income while potentially buying Nvidia stock at a discount. Another strategy that works well with Nvidia's high volatility is selling covered calls. This strategy involves owning shares of Nvidia and then selling call options on those shares. If the stock rises above the strike price, you'll have to sell your shares, but you get to keep the premium. If Nvidia's stock doesn't hit the strike price, you keep both your shares and the premium.
A reset after people have been ordering so many of these chips and maybe think, okay, I've stockpiled and now I don't.
It's a win-win situation for those who already own Nvidia shares and want to boost their returns. For more advanced traders, put credit spreads offer a low-risk, high-reward strategy. A put credit spread involves selling one put and buying another put at a lower strike price. This limits your downside risk while allowing you to profit from the difference in premiums. The goal is for both options to expire worthless, meaning you keep the premium without having to buy the stock. This is a great strategy for those who want to cap their risk while still earning consistent income from Nvidia's volatility. Let's break down an example of how this works. Say Nvidia is trading around $130 and you believe the stock won't fall much further. You could sell a $125 put option. By selling this put, you're agreeing to buy Nvidia at $125 if it drops below that price by the option's expiration date. In exchange, you might collect a premium of $3 per share or $300 per contract, since each contract represents 100 shares. If Nvidia stays above $125, the option expires worthless and you keep the $300. But if Nvidia does fall below $125, you'll be assigned the shares, meaning you'll have to buy 100 shares of Nvidia at $125 each. That may sound like a risk, but you're essentially buying Nvidia at a discount. Plus, you already collected $300 in premium, so your actual cost basis is $122 per share. This strategy is a great way to acquire Nvidia stock at a lower price while generating income. Let's say you're an Nvidia stockholder and want to earn extra income while holding on to your shares. You could sell a covered call option at a strike price of $140. If Nvidia stock rises above $140, you'll sell your shares at that price, but keep the premium, which might be around $5 per share or $500 per contract. If the stock stays below $140, the option expires and you keep both the premium and your shares. This allows you to earn passive income while holding on to Nvidia stock and waiting for the right time to sell. One smart way to manage risk with options is by selling options with different expiration dates. This helps smooth out the income stream and reduces the impact of any short-term market volatility. For example, you could sell a 30-day put option at a $125 strike price while also selling a 60-day put option at a $120 strike price. The idea is to spread out your risk by having options expire at different times. That way, you aren't putting all your eggs in one basket, and you can manage your positions more effectively. This approach also works with covered calls and put credit spreads. By staggering expiration dates, you ensure that you have a steady flow of premium income coming in over time, while lowering the risk of all your options being tied to a single expiration date. This is particularly useful with a stock like Nvidia, where volatility can lead to big price swings in the short term. By selling options with different expirations, you spread out your risk while still capturing high premiums due to Nvidia's volatility. Selling options with different expirations lets you adjust your positions depending on market conditions. If Nvidia's stock starts to climb, you can focus on shorter-term covered calls to capture gains. If the stock drops, you can use longer-term puts to pick up shares at a discount. This strategy keeps your portfolio flexible and responsive to Nvidia's price action, while still generating passive income. We've covered option strategies. Now let's see how Nvidia stacks up against its top competitors in the AI space. Nvidia operates in a highly competitive environment with some big names trying to take a slice of the AI market. Companies like AMD, Broadcom, and Intel are Nvidia's key competitors. AMD, for instance, offers alternative GPUs that often compete on pricing, while Intel is pushing hard to restructure and strengthen its AI chip offerings. Broadcom, on the other hand, is more focused on AI infrastructure and has seen strong growth in that area. What gives Nvidia the edge over these competitors is its technological superiority. Nvidia's GPUs are more advanced, especially when it comes to powering complex AI models. This gives it a significant advantage in the AI space, where computational power is critical. Nvidia also has strong partnerships with major tech firms like Microsoft and Amazon, which rely heavily on its AI technologies to run their data centers and AI applications. These partnerships give Nvidia a steady stream of revenue and a deeper foothold in the AI infrastructure market. On a broader scale, Nvidia faces some challenges too. Economic slowdowns can impact the tech sector as a whole, and there are concerns about US government restrictions on AI chip exports, especially to countries like China. These regulatory issues could slow down Nvidia's international growth in the short term. However, Nvidia has a strong position domestically and continues to lead in innovation, which helps it stay ahead of potential market disruptions. Its leadership in AI and strong customer base make it well equipped to navigate these challenges moving forward. Finally, let's wrap things up by talking about Nvidia's bright future and some smart strategies that could help investors get the most out of it. Nvidia's long-term outlook looks incredibly promising, driven by its ongoing innovations and dominance in the AI industry. The company is not just riding the AI wave, but is at the forefront of it, delivering cutting-edge GPU technology that powers everything from data centers to autonomous vehicles.
Because that car needs to be self-piloted. That car needs to be your smartest robot.
Over the next 2 years, Nvidia is projected to generate $200 billion in free cash flow, which speaks volumes about its financial strength and ability to invest in future innovations. This level of cash flow allows Nvidia to continue expanding its AI technology and remain a leader in the industry, all while rewarding investors through potential share buybacks or dividends. Analysts are very bullish on Nvidia's future. For example, Bank of America recently set a price target of $190, one of the most optimistic estimates, implying a significant upside from current levels. This valuation reflects Nvidia's position as a key player in the rapidly growing AI market, with a total addressable market that could exceed $400 billion in the coming years. As AI continues to expand into new industries and applications, Nvidia's market dominance will likely only strengthen, pushing its valuation even higher. For investors, there are several strategies to consider depending on your time horizon. Long-term investors looking for steady growth may want to consider buying Nvidia on any market dips. The company's strong fundamentals make it an excellent candidate for dollar-cost averaging, where you invest a fixed amount at regular intervals to smooth out the impact of market volatility. This strategy allows you to accumulate Nvidia shares over time without worrying too much about short-term fluctuations in price. Short-term investors, on the other hand, might find Nvidia's volatility appealing for options trading. Selling puts, for example, can be a great way to generate income, especially given Nvidia's high premiums due to its implied volatility. This strategy allows you to either collect premium income or potentially buy Nvidia shares at a discount if the stock price drops to your strike strike price. Another option for more conservative investors is selling covered calls on existing Nvidia shares, allowing you to earn additional income while holding on to your stock. No matter your strategy, Nvidia's strong financial position, dominance in AI, and constant innovation make it a solid long-term play. With analysts continuing to raise price targets and the AI market growing rapidly, Nvidia offers compelling opportunities for both short-term gains and long-term wealth creation. Whether through strategic options trading or simply holding shares for the long haul, Nvidia is positioned to reward its investors as the AI revolution continues to unfold. So, what's your prediction for Nvidia's stock in the next year? Drop your thoughts in the comments. Don't forget to like, share, and subscribe, and hit the notification bell so you don't miss out on any updates. Also, check out our other videos for more stock insights and strategies. Thanks for watching.